Well, it's really about trying to get more confidence of consumers within China. There's nothing they can do about what Donald Trump intends to do or not do, and everyone's trying to play that guessing game. Instead of doing that, as you heard, they're increasing pensions and Social Security so that people have this sense that they don't have to save as much. You have to keep in mind that 45% of wages in China are saved. It's an incredibly mind-boggling figure when you think that in the US it hovers between 3 and 3.6% of incomes are saved. So the main issue is how do you get this unleashed? They're going to coordinate their fiscal and also monetary policy in order to address a number of things, everything from real estate, confidence, making sure that they have enough stimulus in there to push the economy along. Remember, China was 1/3 of the global growth last year and is expected to be the same next year.
Mhm. Then what are the main economic challenges that have led China to make these significant financial decisions?
Well, I mean, COVID was very, very difficult situation for China. It resulted in a slowdown in some sectors. It speeded up the delivery of EVs and things like that during that 3-year period. But otherwise, global consumption was down or changed. And then you saw new patterns emerging. So amidst of this global slowdown, there was also uncertainty within China, especially because of real estate. 70% of all wealth held by individuals is in real estate. So anything that's happening there is very, very sensitive. So the Chinese government is trying to make sure that the price of real estate, it does not become so unrealistic that no one can afford it. They're trying to emphasize that real estate is to live in, not to invest in. So at this point, they are trying to increase confidence in the economy, trying to get people to move some of their wealth more into the real economy, the stock market itself, so where they can kind of unleash these new quality productive forces as a mean of achieving high quality development.
Mm-hmm. So now, why has China decided to issue 3 trillion yuan in special treasury bonds in 2025? What's the main goal behind this move?
Well, as your report pointed out, this is to stimulate the economy. They're trying to get more expenditure to switch from this kind of investment-led economy to a more consumer-driven economy. But the fact is, they're doing both. As you mentioned, they will be investing a lot of money into projects, infrastructure, etc., in order to, take up the slack from the real estate sector. The construction companies can work on those as opposed to putting up more houses that are too expensive for people to actually live in.
Mm-hmm. And this issuance, it will impact the Chinese economy in the short term or the long term?
The issuance is, you have to remember that Chinese national debt is actually very low as percentage of GDP. It's not like the United States or Japan, et cetera. So they have a lot more leeway. They also have a lot more tools at their disposal because it's a centrally led economy. Long term, the money has to be paid back. The question is, how do you do that? And it's anticipated that they will be switching, at least at the local level, more towards a property tax, which could also help this issue about too much money being poured into real estate that is unused, and less in terms of leasing lands, which is one of the reasons that real estate is so expensive.
Mm-hmm. Mrs. Tangen, now, it could help stimulate the domestic consumption amidst the declining household demand. But how do you expect these measures to contribute to achieving China's 5% growth targeting 2025? I mean, you've mentioned that China's responsible for the third of the global growth, and you're quite confident that it will be able to do the same next year.
Well, they have all the tools at their disposal. This isn't like the United States, where they basically tried to run the economy by inching rates up at the Fed. They can do direct stimulus. They can move as quickly or slowly as they want in terms of bank rates, etc. So, yeah, I mean, they have the tools to do it. The question is, what will the cost be? So at this point, people are waiting and seeing first what happens with Donald Trump because they're going to have to react to that. So is the rest of the world. And, as I said in my opening, the only thing you can do at this point is bet on yourself because you have no idea what Donald Trump is going to do. And they seem to be moving along in that direction. In terms of hitting 5%, it's going to be difficult. With if Donald Trump does half of what he says he's going to, the world is going to be in deep disarray. But keep in mind that China is the low-cost producer. It's it's more does more manufacturing than the next five countries combined, and it's very difficult to see how if you need furniture, shoes, and things. I don't think that people are going to be thinking that they should open up a factory in the U.S. On what is in essence a political matter. That could change in 4 years, in which case your investment could go south. So without this added capacity within the United States, Europe, etc., they're going to continue to have to buy from the cheapest sources, ones that still can deliver value. And China is well placed in that area, regardless of how much tariffs are put on these items.
Mhm. Well, you've mentioned at what cost it could be at now. What are the future economic forecasts for China, considering the costs, these financial moves, the broader economic environment, and the future U.S. administration?
Well, I mean, the future U.S. First off, U.S. trade with China is 3% of GDP. It would be a blow to the economy if the U.S. puts as a lot of tariffs on. But as I pointed out, where are they going to get the things that they need? There is no excess capacity in other places or factories that are waiting to start producing for them. So in terms of China going forward, they are going to bet on themselves, and not only themselves, but also on the Belt and Road Initiative. It's been very successful. You've seen that with this Chancay port in Peru, which is, kind of the exact opposite of what Donald Trump is doing with the Panama Canal, where he's saying he's going to seize it. China built it, they operate it, but it's free and open, and it's certainly part of Peru, not China. So we'll have to see what surprises Donald Trump has, but if countries are going forward, they're going to have to start betting on themselves and those who are willing to trade with them. And that's what the Belt and Road Initiative is proving to be for China. Remember, ASEAN is now the number one trade partner, supplanting both Europe and America, and it's growing at double digits.